everyone. It's Alyssa Corum here with Justin Nielsen with a look at the stock market today in this shortened trading session.
Yeah, that came quick.
Exactly. Well, it was a really quick day. But, you know, we did have some gains by the end of the day. The S&P 500 and Nasdaq logging gains of about 0.75%, while the Dow gained about 0.6%. The S&P and Dow more new highs. The Nasdaq continuing to get closer to new highs.
Yeah, so basically, you know, we'll be closed tomorrow for the 4th of July, but it seems like the fireworks kind of started early. You know, a lot of things bursting in air. You know, the S&P 500 and Dow Jones Industrials both hitting new highs. S&P 500 really kind of approaching that 3,000 level, and for the Nasdaq, it's approaching its new highs. Now, that was the one that was getting a little bit slower to get to its new highs, but it's right there. It's in spitting distance to get to those previous highs at 81.76. So it's right there, and more importantly, it's been staying above that 8,000 level. It's been acting very well, and one of the reasons is because a lot of the leading stocks have been acting very well, especially in the software sector, and so that's why we're going to start there.
Exactly. Speaking of leading stocks, the software sector continuing to outperform here. So we want to take a look at a software ETF, IGV here. So new highs for that ETF as well. We're just seeing a lot of standouts from this group.
Yeah, and it's not just, you know, Adobe and Microsoft, of course, have the biggest weightings in this IGV product by iShares, but it's not just them. It's, you know, it's a lot of names in the software sector. We talked about Zscaler, you know, yesterday. You and Ken talked about that, forming an ascending base. You've just got a lot of different names in that software sector that are still acting very well, and that's one of the driving forces behind the Nasdaq's move here. Chips, you know, if you look at SMH, you know, the chip sector ETF, that's been drifting down a little bit. So it's really that strength in the software sector that's kind of driving a lot of this stuff. You have, of course, other things like, you know, news going on with Tesla and Symantec buyout, things like that are happening as well that are helping. But, you know, software seems to be one of the glowing parts.
Yeah, it's always good to have that reminder of needing to always focus on stocks from the leading groups.
Right, exactly, because that's where the gains are going to come from. If you want to just do as well as the indexes, well, then buy an ETF, you know, buy an index ETF. But if you want to really outperform, then you have to be in the leaders.
That's right. Well, let's also take a look at Marin today. The ticker there is AMRN. And we've been showing you weekly charts, but let's go ahead and show a daily chart. And this stock has seen really strong gains in recent sessions after moving sideways here for a little bit. Why did this pop up on your radar? I mean, clearly strong technical action.
Yeah. So this has been on our radar for a while, actually. And, you know, it's unprofitable, but it has very strong sales growth. And what happened yesterday is they actually raised their sales guidance because of an expected FDA approval. So that's one of the things that is rough about biotechs that can help you or hurt you, how these FDA approvals go. But they do have a drug that is very widely respected in terms of using it for high triglyceride issues, and so it really helps reduce major cardiovascular events. But anyway, this was something that was on our radar, and as it cleared this resistance area at 20, we decided to do a swing trade on this. So we put it on Swing Trader yesterday. We also chose it as our IBD stock of the day. So Allison wrote a really nice in-depth report on that. And you know, it had a very big move after the sales growth guidance. We got into it early, and it might have seemed very scary getting into it when it was already up 8-9%. But it closed even higher. And then today it just continued and continued. Now it's actually at a more traditional buy point. So while you might have taken profits as a swing trade, you know, because you already were up 10% on that one, it could turn into a position trade right here, because now it's coming out of a traditional buy point at, what is that?
At 23.35.
23.35, exactly, yeah. So
closing in on that level.
I almost had to pull my glasses out for a second. But yeah, now, and you know, while volume has been very high after the sales guidance as well. So this is something that's getting the attention of institutions.
Yeah, and you mentioned being maybe, some investors maybe being a little hesitant when buying a stock when it's up so much. So your approach here, is it similar to when you're looking at those earnings gaps? Do you want to look at that intraday chart?
Yeah, very similar. I mean, sometimes, you know, Chris Gessel and I will be sitting there and we'll just kind of go through, hey, who are the biggest movers today? And if there's something that looks interesting, those kind of get our attention first. The ones that are the strongest, if they can maintain that strength, can tend to be your biggest winners.
Yeah, well, Match is also getting our attention, continuing to rebound off of the 50-day line as it moves towards a buy point and a new base. It's about 5% below highs with a new base pattern, several that we've seen this year for the stock.
Yeah, and so this is something that we've had on Leaderboard a number of times. We've had this on Swing Trader a number of times because it just kind of keeps on providing these opportunities. So this latest opportunity is a flat base breakout potential. It's only corrected 13%. Got support at its 50-day moving average line. So it's got, what is that, 75.38 is a buy point for that. We actually put this on Leaderboard a little bit earlier as a bounce off the 50-day, and so now we're finally getting traction on that move. If it comes up to the 75.38 area, that could be another buy opportunity as it breaks out of a flat base.
Okay, so that bounce off of the 50-day, that's usually an add-on opportunity for existing investors or for more aggressive investors, a place to initiate a position?
You can initiate. Now, generally, you have to kind of keep in mind you don't want to just keep on initiating as it pulls back to the 50-day because, the first time or two is good.
After a breakout.
Yeah, after a breakout. After it gets to be the fourth, fifth, now you're getting extended, and you have to be very careful not to get yourself in a position where you're more susceptible to a pullback. So.
All right. Well, the traditional buy point here for that flat base, again, is at 75.38. So we'll be keeping tabs on Match. See if we can, I don't know. I don't do Tinder. I don't know if it's swipe right or swipe left. Whichever the good one.
I couldn't tell you. But, the other thing here, too, is, there is a fundamental story here.
Right.
How many people are on, and it's not just Match. It's, Tinder.
Right.
It's
just
OkCupid. It's plenty of,
world.
Plenty of fish. There's, people, whether you're old, whether you're black, Latina, it's just runs
something
the
for
gamut.
everyone.
Yeah, exactly. So they have a lot of brands, and they say that 64% of online relationships are starting on one of their brands. So.
Wow, that's pretty incredible. Again, we'll be watching that pretty closely here, but that is it from us for today. Again, the markets will be closed for the July 4th holiday, so we will see you all back here on Friday. But before we go, just a reminder that our Investing with IBD podcast is dropping a day early. It should be out very shortly, so make sure you're checking investors.com/podcast to get it when it drops. Thanks for joining us today, Justin.
Absolutely.
And thank you all for watching. We'll see you back here Friday.